For the final trade of the day, Mike Patton, the head trader at Thunder Trader, is joining us. Mike, what's your trade?
All right, my trade of the day is Five Below. The symbol is FIVE. As the name implies, it's actually about kids. They're a website that sells merchandise for kids that are five or below. So they have everything from sports to, toys, etc., even stuff for pets. So it's pretty cool. But the company recently had earnings, and on the earnings, they actually took a nosedive. The stock is actually down, trading about at 171, 172 in that range. But before earnings, it was actually trading above $200 a share. But this does present a very interesting opportunity because now that the stock has come down, it actually pulls it into a pretty good valuation point. And I do believe that this stock is likely to see upside after this. So I do think that right now, as we speak, this price range is actually an attractive place to buy. And I do see the stock having significant upside potential. We're looking at anything from 190 to maybe over $200 a share. We already know it's been up there before. In fact, we could actually see this go up to about 220 a share based on the revenue growth, based on the projected earnings growth, et cetera, that's still there. So I just think that the stock got ahead of itself because projections were a little too high as far as what they're expecting to happen. Now it's come down to a more reasonable point. I expect larger buyers to continue to come in. But as far as downside, obviously, if this is not working out, we should see the stock come down lower. My estimate is that if the stock price gets down to about 160 or 161, somewhere in that range, that would be a good idea to get out at that point. But otherwise, you have a lot of upside potential, so I think it's a good buy.
Mike, it's interesting that another trader on our show recently picked Dollar General. There seems to be some beaten down stocks in that discount retail sector. And these are not stocks traders on our show tend to talk about in the retail arena.
That's true. But right now, the reason for that, I'm just pulling up DG on my, I'm pulling up DG on my screen here. So Dollar General, it's not a stock that I would normally go for myself. I mean, these are not really very attractive or sexy stocks, let's say, but a lot of these stocks are trading at really low values when you think about, the potential upside. So yes, the retail markets are struggling, retail businesses are struggling because people are not, getting as much money to spend, with inflation, higher costs, et cetera. But that is pulling a lot of these stocks down to places where realistically they actually have good value. So we're looking at it more from the longer term potential, like the stock could rebound. So Dollar General, me personally, I would actually wait for it to go a little lower. I would only look for it if this price got down to, I would say maybe about $111 a share. If it's at that price, I'd be all over it. So for me, I think it has to come back a little farther. But I do agree with the general idea that this does look like something that might be going up later.
Thank you, Mike. Great trader talk.
No problem.
Go to businessfirstam.com for where to see our show on TV.